potentially turn into support at this level. You know, we're going to need a couple closes above this line here to verify that. But it looks like this one might be out of the woods. So, you know, if you managed to get long somewhere last week and you were able to hold on to that, well, it's looking good because you're a couple of pennies in the money, and hopefully this little area right here could act as some potential support there. But yeah, that one took a nice little fall from its highs of what, $2.48 down to what, 9 cents. So definitely a small cap, I'll say that. All right, just enough time to bust out this new top list and give a little, give my 2 cents on it. At first, it was just going to be the 50, okay? And I think that's the way I left it. I thought about mixing in some of the 20 moving average metrics with it, but that's always something you could add if you wanted to. But right now, what we're going to be focusing on are stocks that are right about, you know, slightly above, right at, or slightly below their 50-period moving average or 50-day moving average. And you can see right here, I'm using a negative 0.5, negative 0.5%, and a positive 0.5%. And this is what that's going to get us. No more than 0.5% above, no more than 0.5% below, or anywhere in between. Could be right at it or anywhere in between. You might still get some thin ones. I just indicated a average daily volume here of 250,000. So you might get a few thin ones pop through there, but we can just kind of weed those out with our looking at our charts here, weeding out the ETFs with the earnings per share filter, and then adding a gap as well. So with these gap settings of negative 1.5 and negative 1, all that's saying is the stock had to have gapped down between 1 and 1.5%. Couldn't be any lower. Now, the reason I folded gap in there is because on a day like today where it seemed like everything was gapping down, I wanted to focus on the stocks that weren't gapping down, quote unquote, a whole lot. Okay. And there were a lot of stocks gapping down a lot more than 1.5% today. But, you know, 1%, 1.5% really filled these three gaps. This is the last gap that has the potential to be filled. It might get filled and it might not, but stocks like to fill gaps. All right. Sometimes they don't, sometimes they keep going, but more times than not, it seems like they like to revisit those gaps before heading higher or lower, depending on, you know, which way the momentum is heading. So not just focusing on things right at that 50-period moving average, but things that gap down a little bit, but not too much. And the theory here is being notified when the gap is filled, because gap might get filled, might not get filled. We don't want to take a chance and go, okay, if we want to be predictive, we would say, you know, if I pulled up, let's just pull up one at random here, EAT, okay. Now, remember the pink line is my 50 period, and kind of interesting what EAT is doing here, the big restaurant conglomerate. So here's today's bar, and look, we got a good snuggly close right at that 50-period moving average and a nice wick. Sellers tried to take it down a little bit further, and if I'm just, you know, spitballing here, could have went all the way down to here, but they just couldn't take it down. So a smaller gap equating into a stock that's going to be weak, like all stocks today, but not be, it's going to be one of the least weak stocks out there, okay? Which sounds kind of silly. I want to find the least weakest stocks today, but of course, in the face of all this red, it makes a little bit more sense than it would on an up day or whatever. So we got a nice snuggly close there, and also what do we have? We have a gap, but not too big of a gap. Okay, actually, EAT has a little bit of traction tomorrow. It'll be back up here filling this gap. So I want to be alerted once the gap is filled, and then make a decision. Okay, do I want to get long in EAT because it reacted well off the 50 period? It is